When the weather warms up, so does the real estate market. Sounds obvious, right? It's true. Spring typically means more home sales. But how will the current interest rates affect people's decisions? What about inventory? Is it high or low? And does that benefit the buyer or the seller? And how do those factors take into account a certain price point or area of the triad? Now it's not so obvious, is it? That's why you should turn to the Ginther Group to make sense of it all. You need someone you can rely on to assess your situation, read the data and trends, and point you in the right direction. Interest rates, inventory, even new construction. There are so many factors that impact our local market. And you should get your information from the folks right here in our backyard. Contact Blake Ginther and the Ginther Group today, 336-283-8689, or visit theginthergroup.com. Buying, selling, investing, or just learning. Whatever you need, start now. And like me, you can become a Ginther Group client for life.
This is the Triad Podcast Network.
Hi, everyone. It's an interesting time right now to be talking all things finance. And Jennifer Johnson, she chuckles, but it's true. And so, look, last month we talked about the tariffs that could be coming and how that was going to impact how it could impact our local economy, how it could impact your personal situation. And so today we're continuing that conversation a little bit, but maybe taking it in a slightly different direction, because as of this recording, tariffs are in effect for our neighboring countries, Canada, Mexico, and that's a very fluid situation. And so what we're here to talk about is how these changes, and we're not focusing just on tariffs, but there's no secret that there's been a lot of movement from a jobs perspective, from an economics perspective, ever since the new administration took office. And Jennifer, as we've mentioned many times on this podcast, whatever side you're on in terms of whether you agree or disagree with the policies that are happening right now, we can all agree that there's been a lot of change, and that can tend to bring movement in the market, correct?
Right. Yeah, that's right. Especially as quickly as we've seen these changes take effect. I think, what was it, January 6th? When was it Trump was inaugurated? Was it the 6th? Is that correct?
It was later. I think it was
maybe the
20th. Later than that. Yeah.
So
the 20th. Yep.
Yeah. So really not even 2 months, right? And there's just been really a flurry of activity, and whether those are good or bad, is really outside the scope, like you were saying, of what we really want to tackle here today. But there's been an obvious impact on the market. And we talked some about that the last time you and I spoke last month, when the tariffs, came into the news, and those were sort of kicked down the road to now, actually, ironically, here in early March, we got sort of a reprieve from those, which gave the market a bit of a relief. And if you want to, understand more about, why that affects stock prices, we talked a lot about it then. But the main concern, of course, is that it would raise prices. That would either squeeze corporate profits so they don't make as much money, or it squeezes the consumer, and so they're buying more necessities, right, like gas and groceries and things like that, and they don't have money left over to buy some of the fun things, that we want to buy. So on either end, whether it's the business themselves or the consumer or both, feeling squeezed, that can, hurt profitability. And we've got all these other things too, right, in the news, like changes in the federal workforce and, people's jobs and things like that. So, so much going on in such a short period of time.
So specifically, as we look back, maybe over the last week or two, today is March 5th, the day of our recording. What have we seen in the market of note?
Yeah, a lot of volatility. We recorded last month. Tariffs were in the focus, and that caused the market to go down for the reasons we just mentioned. Then we got a little bit of relief from that. There was some hope, and I think there still is. We're still at that point, I think, where we don't really know what those negotiations will lead to, and so that's led to some uncertainty. But once that was, sort of pushed off the table, if you will, or pushed down the road, focus really changed on things like some of the earnings reports that we were getting, um, jobs reports and consumer confidence. And so the market really rose. I mean, we hit an all-time high. I think it may be a week and a half ago at this point, really. So the market really responded positively. And since that time, has certainly gone down, and particularly some of the high growth names that we've talked about before in the tech sector. Those have come down, of course, the hardest, as you'd expect. Those tend to move, the most. So it's really been kind of a whirlwind. And I know I'm, fielding questions from clients, and, I've said this before, but I may look like I'm 18 years old, for you that can see me, but I've been at this for so long now. So I've been an advisor for 20 years, believe it or not, which doesn't seem right to me, but I've been through these things so many times, right, that I know that causes a lot of concern for people. Um, they have questions, about what to do during this time and what not to do. And for our clients, of course, they have access to me. I know for our listeners, they may not have those voices in their life, right? And so if you Google it, you're probably gonna get all kinds of advice. And so my hope today is to kind of be a little bit of maybe a voice of reason, if you will, for folks that have questions. Gosh, because with that kind of volatility in just a few weeks, where you're like, it's an all-time high, oh my gosh, now we're down 5%. It's really causes people to get emotional, right? I think particularly with the news headlines we have now, because people have so many strong feelings about the administration one way or the other, and they make their financial decisions based on that, and we usually know that's not what you want to do.
Yeah. And so whatever impact this is going to have on some of these companies that tend to be the harbingers of which way the market is going to go overall, some of this may not be known in terms of the effects until a future earnings report,
Sure,
right?
that's
So
that's right.
at the next quarter. So this what we're going to talk about today is something not necessarily just for today or the coming days, but it could be something that you'll want to keep in the back of your mind for future months,
Sure.
depending on
Yeah,
how things go.
that's right.
So to your point, in terms of what we want to accomplish here today, you fielded a lot of calls from clients because of the volatility and trying to figure out what to do. But what we're trying to do in this podcast is reach people that may have these questions, but they don't have somebody to call in terms
Yeah.
of what to do. And so think of this as the other end of that phone call if you're listening to us and you might be having these same questions. It's okay, what are things that I should do if I'm
Right.
looking and the market is not going in a direction that I'm very
Yeah,
comfortable with?
that's
So
right. Because whether
um
it be for this reason or another, this is just part of being an investor, right? I guess is one way to make sure that's clear, because we've had all these different reasons in the past, that the market has moved and is sometimes very, very quick and, and violent ways. And I don't think that'll change. I think that's going to continue to be the case. And so I think it's helpful for people to know, okay, what are some things that, what are some positive things, that I can do during this time, or some mistakes, to avoid, because remember too, and we've talked about this before, that the market is trying to look into the future. And by market, I mean the stock market. They're trying to look in the future, because you're buying parts of these companies because you want their future earnings, either through appreciation in the stock price or a dividend. And whatever they look into the future, they're looking out the windshield and it's like cloudy, or like you just can't see, it's not clear where you're headed. You're going to see this kind of volatility and just kind of crazy movements that make it nervous. So I know that's a time where people make some mistakes. I've seen it, before in working with people. So I think now is one of those moments too that can hopefully be a lesson to people.
so if somebody calls you and they're feeling nervous, I don't want to
Sure.
portray anybody as necessarily panicking when they talk to you, but if they're feeling
Yeah.
nervous, if
Sure,
they're
sure,
feeling some
sure,
apprehension,
sure.
what's the first thing that you tell them to try to make them feel a little bit more at ease?
Yeah, yeah. I mean, I think the first thing you try to do is to try to sort of keep them calm, if you will. I mean, I can't think of a time, we can think back of all the experiences we've had when COVID hit, or, 2008, the Great Recession, or, even as recent as 2022 when the market sold off a lot. I mean, it's rarely the time, we really don't say, okay, this is the time that you should panic, right? This is the time that you should freak out, and sell all your investments at the worst moment. I mean, I can't think of a moment where I have said that to anyone. Because that's not what you want to do, right? You don't want to sell when things are down. Like, that's just not the ideal, but yet our emotions, want to lead us in that direction because it's so painful, right? Now most people have online access to their accounts. They can look at it multiple times a day, every day. They see headlines constantly in their face, and so it leads to a lot of, just a lot of concern, and certainly concern can be valid, but I think the first thing I try to do is to keep a perspective in that, as I said earlier, markets go through downtimes, right? I mean, you just kind of have to expect that when you're investing in the market. And so to remember, this is a normal experience. Does that make sense? Like that
It does.
you have
Mhm.
these times. This is part of it. And rarely do our emotions lead us, to the right decision. So it's sort of putting some factual data maybe around the feelings that we're feeling. And I get it. Like, I have the same feelings, like I have my own accounts too. Like, I have all the same emotions that people have when I see those. And so I'm empathetic. It's just that's sort of my job as an advisor.
Yeah. And to your point about having been through this for 20 years now, you've seen, and there's a lot of reasons why this happens, but you've seen volatility in the market.
Yeah.
So
Yeah.
it's so to your point, like I guess it's not important to focus on the why as
Right.
much as just, hey, these things happen and here's how
That's
to
right.
react.
I think that's exactly right, because it could be all sorts of reasons, right? I mean, I think some right now people are, well, we've never seen this before. Well, we kind of have. I mean, tariffs, those are things we've dealt with before. I mean, I think it feels different. It always feels different, right? Whatever it is. Even if you think back to when COVID hit back in 2020, I mean, that was a new thing, and there were definitely folks that thought we would not recover from that, anywhere near as quickly as we did, but yet we did, on a market standpoint. So that's important to keep in mind, that we've been through all these sort of crazy things, oil embargoes in the 70s, and accounting scandals, and
Mhm.
different presidencies, and yet here we are. And so I think that historical perspective is really good to keep in mind.
Yeah. I mean, if you invest in Waffle House, their 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 bottom line is going to be affected by eggs, right?
Right, right.
But the egg shortage is not the result of tariffs. The
That's
price
right.
of eggs has nothing to do with that. It's
Yeah,
bird flu and killing chickens, and and
that's
so
right.
with chickens dying off in mass quantities, there's fewer eggs available. So
Yeah,
yeah, I mean, there's like you said, there's a lot of different reasons why things happen in terms of the profitability of companies.
sure.
So if they're staying calm and you try to get them to understand that this is not an unusual thing that happens, do you tell them to just pause or scale back on what they're doing? What do
Sure.
you tell them to do when
You
things get
know,
bad?
yeah, I mean, I think one of the mistakes I've seen in years past is people, and this tends to be in a more prolonged downturn, in that people will stop saving for their goals. So if you're saving in your workplace plan at work, and you get that first statement, it's down a little bit, they'll stick with it. The next quarter comes along, if that thing is still down, and you notice, hey, I'm putting money in there and it's still going down. A lot of times people will get real frustrated with that, and they'll stop adding to their accounts. Well, if you think back again, back to kind of getting thinking about this rationally, when is your best time to buy stuff, right? It's when it's down. And so if you have a portfolio that you feel good about, and I should say that from the beginning, I mean, you got to make sure you're in things that you feel good about, right? Because there are some things that might not be appropriate for you, and that's certainly hard for me to speak to at an individual level in this context. But it would be good, to have someone that they could speak to about that, because if you're in a quality portfolio that's appropriate for you, your time frame on those goals, I think the best thing you can do is to continue to save, continue to add to that. Or if you're not, frankly, if you realize I should have been adding to this, and I have extra money, above and beyond my emergency fund. Well, this is your opportunity. Are you going to time that exactly right? I mean, probably not, right? I mean, we have to recognize too, this idea of timing the market exactly right, where you sell at the peak and then you buy at a trough, is really, really difficult to do. I mean, I just don't know anyone that consistently does that, but we do feel comfortable if you're in a good portfolio, you're saving consistently, or you use these opportunities as buying opportunities. Those folks end up, much better off, much happier with the results. So certainly, step one would be to not panic, if you will. Again, assuming you're in the right investments for you, and then make sure you keep saving or use this as a savings opportunity.
Springtime brings so many special occasions, so why not spring into Dewey's for all your celebration needs? From custom, unique cakes to balloons and party tableware to the perfect gift, Dewey's is your one-stop shop in the Triad. Even if you don't have a big event on the horizon, it's always a great day to stop by your local Dewey's Bakery, especially on Mondays for a free Cake Square Day. No purchase necessary and available all year round at any of their Triad area locations in Winston-Salem at Thruway Shopping Center and Renolda Manor, and in Greensboro at the Friendly Shopping Center. Need to place that order now? Visit local.deweys.com, and as a listener of the Triad Podcast Network, you'll receive 25% off by using the code PODCAST. Our friends at Dewey's are always finding great ways to give back to our local community, providing millions of dollars to nonprofits. Your organization can also partner with Dewey's to raise money. Just email cake@deweys.com to learn more. Don't miss the chance to make your event even more special with an order at local.deweys.com. Use the promo code PODCAST for 25% off. Dewey's. Celebrate every day.
The first two things that we've talked about, keeping calm, continuing to save, not hitting pause, because when things are lower, it's an opportunity to get more bang for your buck when you're investing. So those two things are items that I've heard before, and maybe others
Sure.
listening have heard these before. That you
Pretty
came
obvious,
up with
hopefully.
but
Yeah.
you came up with So you came up with four things that you
Yeah.
tend to advise people on. These next two are not ones that I'm familiar with, and maybe others aren't
Yeah.
as well. So now we get
Yeah.
to get into more of the advanced stage of
Yeah. Yeah.
of advice here. But you listed one here it just says Roth conversions. I'm very curious to know what that is.
What that is. Yeah. And so the conversion, most people are familiar probably with a Roth IRA, and that you add to, after tax dollars, which grow and come out tax free as long as you follow all the rules, around being the right age and that sort of thing. Um, you can convert pre-tax savings like a traditional IRA, sometimes a 401k, from pre-tax to Roth. It's certainly something that you'd want to get some tax advice on. But the best time to do that really is when the market is down. And I'll give you an example. So let's say, you own a technology stock. We won't name any to like shame anybody in particular or anything like that, but let's say you own a technology stock, and 2022 was actually a great time to do this, because if you remember, the market was down that year, and a lot of that sector really took it on the chin. The idea is when you've got that account, you've got that technology investment in your your IRA, your traditional IRA, any growth on that, if it grows huge, that's great, right? But when you go to take that profit out, it's all taxable to you because remember, you haven't paid any tax on it, right? So you let that grow and then you take it out in retirement, and that's great. And all certainly you want to have growth in there. But the benefit of maybe converting that to a Roth is, let's say that particular investment is way down at that moment. The value of those shares, that 100 shares, just to make it easy, is really down. It's down 40% or something like that. If you convert that into a Roth, so you take it from your pre-tax account and you convert it into Roth, the catch is you're going to have to pay tax on that amount, right? But it's at a low point, right? So the tax burden hopefully is lower, right? At that point, because it's down. Now you get those shares in your Roth, and let's say that that guy takes off and you get all that growth in the Roth IRA, which ideally, again, you follow all the rules around that, consult your tax advisor and all the other disclosures I'm supposed to give, but you follow all the rules on that, and then that growth comes out for you tax free in retirement. So that's a little bit more sophisticated thing, certainly, than the first two things we talked about. But I think is this what I would hope people would take from this is that there are some smart things you can do during times like this that could really set you up well. Does that make sense?
It does. I've never heard that before, but it does make sense. And it is a way to save because, again, what you're saying is at some point, whether you do it as a Roth or a traditional, at some point you have to pay taxes on those investments.
That's right.
So find a way to do it where that amount is going to be mitigated.
Yeah, yeah. And you've got to, of course, consider your tax burden today and all that stuff.
Mm-hmm.
But now's a great time. My point in this discussion is, what can you do when the market's down? That's a smart move. That would be one of them, is to say, okay, I've got this, this particular, I just use technology because those stocks tend to be the most volatile, provide the most growth. You've got one, it's down for the moment, but you really believe in it. You think, hey, this is going to really grow in the future. The more of that growth you can get in your Roth IRA, the better, because then that growth comes out tax free for you later on. Now you've got to decide, are you comfortable paying the tax now on that conversion? And that's where it gets tricky, and certainly something you want to look at your own situation, as we've said many times. But I just want to plant that as an idea for folks that particularly, I think we'll see these volatile days continue for a little bit. You'll have maybe some opportunities to take advantage of that.
I love this. We've jumped into the financing and investing 101 to the 201 course, and
Yeah,
it's
I did
great
take a little bit of a
information.
leap.
Yeah.
Yeah,
Well,
yeah.
let's keep it going because this last one is another phrase that I've never heard before, but
Really? Okay.
but it catches my interest
Okay, good.
because
Yeah.
I tax loss harvesting.
Yeah. What is that? Yeah.
Yeah.
So now this would have to be done, outside of the IRA. So forget about the retirement account for a minute. Let's say I buy something in just a brokerage account, a general investment account for me. I bought something, I believe in it, or maybe it's a sector fund, an index fund, or something like that. I've owned it, and then now it's down, right? And so I'm like, well, okay, it's failed. Wouldn't it be nice to be able to take that loss off my taxes, right? Because, if we've talked about probably capital gains before. If you buy something, it appreciates unless you have it in an IRA or a Roth like that. You're typically, if you sell that investment, you pay the capital gains on it. Um, if you've got a loss, only if you sell that do you can you take advantage of the tax loss, right? This is again something that's a little bit more sophisticated, so you're going to want to talk to your tax person about it. But remember, my point number one was I told you not to sell into a down market, right? So how does that work then? Well, what you do is you try to find something similar. So let's say I've got an investment, it focuses on, say, dividend companies that pay dividends. Maybe it's an index fund or an ETF or something like that, where it's a mutual fund or something that focuses on dividend payers. And that's down because the market's down. If I sell that and then I find something very similar, in that same space, and you buy that, that way you remain invested. So, because hopefully the market recovers, right? You don't want to just sell it and wait, because that way, what if the market bounces back and then you're frustrated, right? But if you sell that, now you've got that tax loss that you can count this year. And then if you stay invested that way, if the market pops back up the next day, which it certainly could. I mean, we've seen this kind of incredible volatility over the last week, that keeps you invested. And then it takes that loss off. Because if you just hold that investment, and you don't sell it, whether it be down or up at different points during the year, that doesn't sort of benefit or hurt your tax situation. But that way, that's why we call it harvesting them. So you look at the account and you say, okay, which ones can I harvest? Which ones can I take advantage of? And as long as you keep your account, your strategy kind of similarly invested, it can't be the same thing, because if you owned a company, shares in a company, you can't sell it and then immediately buy the same thing right away, or else they'll disallow that loss. You have to sell it and either buy something very similar, which is my favorite, to keep you invested. Maybe it's something in the same industry or sector or type of company. Or you could wait at least 30 days and buy it back. But then you're out of that investment for 30 days. And as we have seen, a lot can change in 30 days. Does that make sense?
It does. And to be clear, this is not something that you can utilize with a retirement account, because you're not
Correct.
you're not selling, you're holding that and keeping that for a long-term play. This is
That's
more
right.
of these are more short-term investments, right?
Right, or after tax investments, you
After
might
tax
hear it called.
investments.
Like, so they're
Okay.
not, it doesn't work in the 401(k) because,
Right.
or that Roth or traditional IRA. So it'd have to be at an account you have outside of that. But that's those accounts, remember, you're getting that 1099. This is the season for that, right? Where you're getting the reports for 2024 that would say you got so much in dividends, so much in interest, and here are your capital gains for 2024, and that all gets reported on your taxes. This what I'm speaking to is the capital gain piece of that, in which if you have losses in there, if you never sell those investments, you never get to benefit from that loss at all. Of course, like I said earlier, you don't want to sell stuff when it's down. So but that's a way to sort of take advantage of that, and still stay invested in a similar strategy. We call that tax loss harvesting. You can do that any point during the year. A lot of times, what people do traditionally is in December at the end of the year, they'll see where they are in terms of gains and losses. And if they've got gains, maybe they offset them, they make some changes, then. But what I would say to people is, when the market is down is your best opportunity to do that, because it may not be, you don't know where it's going to be in December,
Mm-hmm.
right? But if you've got something now, you can move and take advantage of that. So I know that's a little bit sophisticated. It's probably a new term to people. It sounds like it was a new term to you.
Yeah.
And it's something, if you have an advisor, or you've got a tax person, or there's somebody that you can go to and say, hey, is this something that would benefit me, is the question I would ask. Or if you're managing your own portfolio, hopefully I've given you enough where you can look at it and say, okay, I see that one is at a loss of so many dollars. Here's how I could take advantage of that, if I make these changes.
Very interesting. This is I love this because A, it's educational, and B,
Sure.
I feel like this is one of the times where we've allowed you to really flex your muscles on this
Oh,
podcast,
really? Okay, good, 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 good.
where it's like,
Yeah.
hey, you know, I know that you know your stuff, but it's always good to hear you get into really sophisticated topics like this,
Okay.
where it's like, okay,
Okay,
yeah,
good,
there's a
good.
reason why Jennifer is in this field and is a certified financial planner, because she can clearly explain things like this that someone like me, that's a novice, has never heard about before.
Okay, good.
So
Yeah, well, good.
this is
Well, I hope
great.
that's helpful. Yeah, yeah. Sometimes it's hard for me to, you don't want to get too in the weeds, for
Yeah.
people. And all these won't apply to everyone, certainly. But,
Mhm.
my goal for today was to say, here's four things, because certainly nobody likes for markets to be down. But there are some opportunities that those create, and I think that's just good for people to keep in mind. Particularly, I mean, with the all the news now is just really coming at us with all sorts of stuff. Um, wanted to bring a little bit of positivity, if you
Yes.
will.
So
Yeah.
some picture this as though you're on a phone call with someone like Jennifer who can guide you through some of these waters. And if you're wondering what to do if some of your investments are going in the wrong direction right now, these are
Right.
maybe some things that you can use as
Yeah.
advice. But
Yeah.
as we always say at the end of every podcast, if you would like to discuss your personal situation, because every individual situation is different, Jennifer, if she's someone you'd like to talk to, then Jennifer, how can they reach you?
Yeah, they can give me a call. We're here local in Winston, and our number is 336-701-1600. So local number. Check us out online. Our website is our firm name, all spelled out. It's three Magnolias with an S, financialadvisors.com. So check us out. We put the podcast on there too, so you can go back and hear us talk about a whole range of topics. And I hope these have been helpful for folks. If you think some of them might apply to you, and you don't know where to turn, feel free to reach out. We'd love to talk to you.
Yep. And like I said, she flexed her muscles a little bit on this show, which was great.
You
So
did yell, yeah.
just think about what kind of topics you could get into in a one-on-one conversation.
Sure,
So,
sure. Well, thank you,
Jennifer,
Adam.
thank you so much. We will talk to you again next month.
All right, awesome.
Securities offered through Private Client Services, member FINRA SIPC. Investment advisory services offered through Three Magnolias Financial Advisors, located at 110 Oakwood Drive, Suite 480, Winston-Salem, North Carolina, 27103. Three Magnolias Financial Advisors and Private Client Services are not affiliated. Private Client Services is under separate ownership from any other named entity. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. All economic and performance information is historical and not indicative of future results. The market indices discussed are unmanaged. Additional risks are associated with international investing, such as currency fluctuations, political and economic stability, and differences in accounting standards. The views depicted in this material are for information purposes only, and not necessarily those of Private Client Services. They should not be considered specific advice or recommendations for any individual. Neither Private Client Services nor any of its representatives may give legal or tax advice.
This is the Triad Podcast Network.